Tell your family that movie night is canceled. Tell them daddy or mommy needs to stare at a blank screen and hyperventilate for the next 48 hours. Because while you were sleeping, while you were thinking about what you were having for brunch tomorrow, the financial infrastructure of the Western world just flickered. It didn't go out. It didn't explode. It flickered. And in the world of high-frequency trading, a flicker is worse than an explosion. An explosion you can see. A flicker makes you question your sanity. Mark here from GoFinance. It is Saturday, January 31st, 2026. The markets are closed. The trading floors are empty. This is supposed to be the boring part of finance, the weekend, the time when clearinghouses run batch processes, reconcile the books, and publish the reports that tell us exactly who owns what. It is the plumbing, the unsexy infrastructure that holds the whole system together. Today, the plumbing is leaking radioactive waste. We have been monitoring the data feeds from the CME group, the Chicago Mercantile Exchange, the single most important financial exchange on this planet. And what we are seeing right now should not be possible if this system is solvent. The lights have gone out. I'm not talking about a power outage. I'm talking about an information blackout. We have been trying to pull the daily delivery notices report, the issues and stops data, the holy grail of physical metal movement tracking. And what are we getting? Silence. Fields populated with zeros, timestamps that haven't updated since Thursday. A reporting glitch that just so happens to coincide with the most violent week in the history of the gold market. Do you believe in coincidences? Because I don't. I believe in crime. And what we are looking at right now is the digital fingerprint of the biggest bank heist in history. Let me explain exactly what is missing. Because unless you are a forensic accountant, you might not grasp the significance of what just disappeared from the system. Every single day, the CME publishes two sets of numbers. Number one is volume. How many contracts were traded? I bought, you sold. Simple. Number two is issues and stops. How many of those contracts actually resulted in physical delivery? I bought the contract and I demanded the actual gold bar. These two numbers have to match. The math has to balance. If 100 people stood for delivery, the report has to show 100 notices issued. If the numbers don't add up, something is very, very wrong. For the last 2 weeks, we have been seeing irregularities, volume numbers that suggest massive deliveries are happening. But the issues and stops report is showing nothing, or it is showing numbers that are mathematically impossible given the volume data we are pulling from the same system. And today, the report simply didn't update. The CME issued a vague statement about technical reporting issues. Technical issues. That is the corporate euphemism for we have lost control of the ledger. Now you might think, so what? It is a computer bug. They will fix it on Monday morning. No. You don't understand what the CME actually is. It is not a video game. It is not a streaming service that buffers when too many people are watching at once. It is the central nervous system of the global economy. It spends billions of dollars every single year on redundancy, backups, and cybersecurity. The CME does not just have a glitch on the weekend of a 2 million ounce delivery cycle. That is, like the vault door at Fort Knox accidentally falling open on the same day a convoy of unmarked trucks drives by. This is not a bug. This is a cover-up. And to understand what they are covering up, you have to look at the shadows. You have to look at the rumors that are circulating through the intelligence community right now about a group called Typhoon. This is not a weather event. This is the code name for a state-sponsored hacking group allegedly originating from China that has been penetrating United States critical infrastructure for months. They found them inside the telecom networks, inside the power grid, inside water treatment plants. But the one target that nobody talked about publicly was the financial settlement layer. Here is the theory that is starting to leak through the back channels of Wall Street this weekend. What if Typhoon didn't hack the CME to destroy it? What if they hacked it to front run it? Think about it. You are a hacker working for a foreign government that is desperate for gold. You don't want to blow up the exchange. You want to use it. You infiltrate the algorithm that matches buyers and sellers. You insert a piece of code, a ghost protocol that prioritizes your orders above everyone else's. You drain the physical metal out of the registered vaults and move it into your accounts. But you suppress the reporting, so nobody sees the drain happening in real time. You are stealing the gold, but the security camera is on a loop showing a full vault. Subscribe to this channel right now if you want to understand what happens when the markets open on Monday, because what I am about to show you is how a state-sponsored hack could drain the vaults while the security cameras show an empty hallway. Think about the sophistication required to pull off a bank heist in the 21st century. You don't run in with masks and guns. That is amateur hour. That gets you caught in 40 seconds. You hack the ledger. You infiltrate the matching engine, the algorithm that decides who owns what contract, who gets delivery, where the metal physically moves, and you insert what the intelligence community is now calling a ghost protocol. Here's what the rumor suggests actually happened. The hackers allegedly manipulated the delivery notices algorithm. They created a back door that allowed them to issue valid delivery demands for physical metal while simultaneously suppressing the reporting of those demands to the risk management systems that are supposed to catch exactly this kind of activity. In simple terms, they told the vault to release the gold, but they told the security camera to show an empty hallway. They blinded the system for 2 weeks. While the data was showing irregularities, while the volume numbers weren't matching the delivery reports, it is possible that massive amounts of bullion were being retitled, moved from registered inventory into private shadow accounts controlled by shell companies linked to the East. They were draining the pool, but the water gauge was rigged to show full. This explains why the CME had to go dark today. They didn't just have a reporting error. They likely woke up this morning, ran a physical audit of the registered vaults, and realized that the map didn't match the territory. The computer said they had 5 million ounces of gold. The shelf was empty. The technical issue is the cover story they're using, while they desperately try to figure out where the metal went. They had to shut down the reporting, because if they published the real numbers, if they published a report showing a sudden unexplained drop in eligible inventory, it would trigger a global run on the bank. So they pulled the plug, they turned off the scoreboard to hide the score. And why would China do this? Why would they risk an act of war on this scale? Because this is war. If the United States is using Plaza Accord 2.0 to crash the dollar and damage the Chinese economy, as we discussed in the previous video, then China needs an asymmetric weapon to strike back. Draining the COMEX is that weapon. By stealing the physical collateral that underpins the Western financial system, they can force a default. They can prove to the world that the king has no clothes. It is a raid in the most ancient sense of the word. They came in the night while the guards were sleeping and they took the treasure. This recontextualizes everything we are seeing right now. The $283 spread isn't just a market inefficiency, it is the market pricing in the theft. The smart money knows the metal is gone. They know that the registered inventory number is a lie, and that means the paper contracts trading in New York are now backed by nothing. They are claims on a vault that has been raided. The cyber war has moved from the theoretical to the physical. It is no longer about stealing data, it is about stealing atoms. And if this theory holds true, if Salt Typhoon has indeed compromised the settlement layer, then Monday morning is not just a volatility event, it is a crime scene investigation. The CME will have to admit that either the data is corrupted, which destroys trust in the entire system, or the metal is missing, which destroys the price. There is no third option. The West has to shut down the reporting to hide the theft, but they cannot hide the price. Because while they were busy fighting the hackers, the arbitrage bots noticed the discrepancy. And that brings us back to the math. That brings us back to the $283 gap that proves the raid was successful. Math does not have an opinion. Math does not care about technical difficulties or press releases from the CME group. Math only cares about equality. And right now, the equation that holds the global financial system together, the equation that says price in place A must equal price in place B, has just returned a divide by zero error. We are staring at a $283 anomaly that should not exist in this universe. Let me put that number on the scoreboard for you. As of Saturday evening, even though the main markets are closed, the after-hours electronic desks and the physical bullion networks are still quoting prices. And the divergence is getting wider by the hour. In New York, the paper price of gold, the price for a futures contract that supposedly represents 1 ounce of physical metal, is sitting at roughly $5,200. In Mumbai, the physical price, the price you pay to actually hold a kilobar in your hand, is trading at $5,483. Subtract the two, $283. Now, I need you to understand how a normal market works to grasp how terrifying that number actually is. In a normal market, we have high-frequency trading firms, and these are companies that spend millions of dollars to lay fiber optic cables across entire oceans just to shave 3 milliseconds off their connection speed. They run algorithms, arbitrage bots that scan the world 24 hours a day, 7 days a week for price differences. If gold is 1 cent cheaper in New York than it is in Mumbai, the bot buys New York and sells Mumbai. It locks in that 1 cent profit instantly. It does this millions of times per day. It is free money. It is risk-free profit for anyone with the infrastructure to execute it. So if there is a $283 difference, what should happen? Every single bot on the planet should be screaming. Every hedge fund, every bank, every algorithm should be backing up the truck. They should be buying New York gold with both hands and selling it in Mumbai until the prices snap back together. The spread should close in seconds, maybe minutes at most. But it hasn't closed. It has been sitting open for 6 hours, staring at us, growing wider. Why? Why is nobody picking up the $283 bill lying on the sidewalk? There is only one answer, because you cannot move the metal. The arbitrage trade requires 2 steps. Step 1, buy the cheap paper contract in New York. Step 2, take delivery of the physical bar and ship it to Mumbai to sell at the higher price. The bots can do step 1 instantly, but they are hitting a brick wall at step 2. The computer knows. Or the risk managers controlling the computer know that if they buy the New York contract, they will never get the gold. They know the CME vault is empty. They know that technical issues means insolvency. If you buy a contract for $5,200, but the exchange forces you to settle for cash instead of metal because they don't have it, you cannot complete the trade. You're left holding a paper bag while the price in Mumbai rips higher. So the bots have been turned off. The kill switch has been engaged. The liquidity providers have looked at the risk of non-delivery and decided it is infinite. This means that arbitrage is dead, and when arbitrage dies, the global market dies with it. We no longer have a single global price of gold. We have a New York price, which is fake, and a Mumbai price, which is real. The United States market has become an island of irrelevance. It is like a store that advertises televisions for $10, but when you walk in, the shelves are completely empty. Sure, the price is low, but you cannot buy anything. The price is a ghost. And it isn't just gold. Look at silver. The spread between the London spot market and the physical market in Hong Kong has blown out to $13. $13? That is more than 10% of the total price. Usually that spread is 10 cents. This tells us the metal is trapped. Silver in Hong Kong is being hoarded behind a wall. It cannot leave. The flow has stopped. The velocity of money has hit zero. This is the signal of a systemic seizure, the financial equivalent of a heart attack. The blood, the liquidity, is not pumping to the extremities. And when the blood stops pumping, the tissue starts to die. We are watching the death of the paper pricing mechanism in real time. But why now? Why did the arbitrage break today of all days? Why is the metal trapped in Hong Kong? Is it just market forces? Bad luck? Incompetence? No, it is legal warfare. While the CME was going dark in Chicago due to technical issues, the major bullion banks in Hong Kong suddenly decided that this weekend, right in the middle of a global liquidity crisis, was the perfect time for system upgrades. We are receiving reports from traders in Asia that HSBC Hong Kong and several other major custodial vaults have effectively frozen operations. If you try to initiate a withdrawal of physical silver today, you cannot. If you try to allocate gold bars for export to London, the system says pending. The request just sits there. Nothing moves. The official reason? Emergency cybersecurity maintenance, compliance updates. It sounds boring. It sounds like standard corporate bureaucracy, something every bank does from time to time without anyone paying attention. Do not be fooled. This is not maintenance. This is a siege. There's a piece of legislation that slipped under the radar for most people, but right now it is arguably the most consequential document in the global financial system. It is called the Protection of Critical Infrastructure Ordinance, and it came into full force in Hong Kong on January 1st, 2026. This law gives the authorities sweeping powers to take control of, shut down, or freeze any system that is deemed critical infrastructure in the event of a cybersecurity threat. And guess what counts as critical infrastructure under this ordinance? Financial clearing systems, precious metals vaults, settlement layers. Connect the dots. Dot 1. A cyber attack, allegedly Salt Typhoon, hits the United States financial system. The CME goes dark. Reporting stops completely. Dot 2. The authorities in Hong Kong declare a high threat level to their own infrastructure, citing the global cyber instability originating from the United States system. Dot 3. They invoke the ordinance. They tell the banks, lock it down. No digital transfers, no physical movements. We need to audit every system to ensure no malicious code has infiltrated our vaults. It is the perfect legal cover. They are not defaulting. They are not saying we don't have the silver. That would cause an immediate panic. That would cause a run on every vault in Asia within hours. Instead, they are saying, we are protecting you. We are securing the system against hackers. We just need to pause withdrawals for a few days to check the code. It is genius. It allows them to stop the bleeding without admitting they are bleeding. It allows China to effectively hoard every single ounce of silver and gold currently sitting in Hong Kong warehouses, while the rest of the world watches helplessly. The metal checks in, but it does not check out. It is a roach motel for precious metals. This is why the spread is $13. The market knows that the silver in Hong Kong is trapped behind a digital iron curtain. Traders in London are screaming for metal. They are willing to pay any premium imaginable, but the vault managers in Hong Kong are pointing to a computer screen that says system lockdown and shrugging their shoulders. Sorry, can't open the door. The government says we have to scan for malware first. Meanwhile, that metal is being quietly retitled, moving from Western custody accounts into Eastern strategic reserves while the lights are off and nobody is watching. The timing is undeniable. The United States reporting goes dark on the exact same weekend that Hong Kong locks the gates. This is a coordinated pincer movement. The West hides the emptiness of its vaults. The East locks the doors to its hoard. And caught in the middle is the global supply chain, which is now suffocating. There is no liquidity. There is no flow. We have moved from a just-in-time delivery system to a just-in-case hoarding system overnight. Think about the implications for what happens when the markets reopen. If you are a short seller right now, if you are a hedge fund that bet against precious metals this week, you are currently sweating because to close your short position, you need to either deliver physical metal or buy it back at market price. But where do you get it? You cannot get it from the CME because they lost the data. You cannot get it from Hong Kong because they are under maintenance. You cannot get it from London because the LBMA electronic matching systems went offline, citing technical difficulties at the exact moment the sell-off began. You are trapped in a burning building with no exits. The pressure is building in the pipes. And since there is no physical release valve, since the metal physically cannot move to equalize the price between markets, the only thing that can move is the paper price. The price on the screen has to go vertical to reflect the fact that the asset is now unobtainable. We are staring at the potential for a force majeure event. For those unfamiliar, force majeure is the legal term for an act of God. It is the clause buried deep in every futures contract that says, if we cannot deliver the physical metal due to unforeseen circumstances, like a natural disaster or a cyber attack, we don't have to deliver. We can settle your contract in cash instead. But here's the critical question that is going to tear the legal system apart on Monday morning. What price do they pay you? Do they pay you the fake New York price, the paper price that was smashed during the sell-off? Or do they pay you the real Mumbai price, the physical price where actual metal changes hands? The fight over that settlement price is going to be the bloodiest legal battle in the history of financial markets, and it starts the moment the bells ring on Monday. Now let me show you the physics of what happens when a blocked market finally opens. Usually, financial pressure is released gradually. Prices move up a little, arbitrageurs sell into the strength, prices come back down. It is a steam valve, constant tiny releases that keep the system from exploding. But right now that valve is welded shut. We have a $283 spread on gold. We have a $13 spread on silver. We have a broken ledger in Chicago and a locked vault in Hong Kong. There is no mechanism left to equalize the pressure. So when the electronic markets open on Sunday night in Wellington, New Zealand, the price cannot drift higher. It cannot ease into a new equilibrium. It has to teleport. My prediction for Sunday night is simple and terrifying. We are going to see a violent repricing event. Imagine you are a mid-sized hedge fund. You are short 500 contracts of silver. You went home Friday night feeling smart because the price crashed. Then, over the weekend, you read the news, you see the CME data vanish, you see Hong Kong locked down, you see the spread blow out to levels that have never existed in modern markets. You realize you are short an asset that literally does not exist in the available float. You realize that if you don't cover your position right now, you might be forced to deliver physical metal that you cannot buy at any price on earth. So the moment the bell rings Sunday night, you hit buy at market. You don't care about the price. You just want out. And every other short seller on the planet is hitting the exact same button at the exact same moment. And who is selling? Nobody. The arbitrage bots are offline because of the hack. The miners are holding back supply because they smell blood. The dealers are under maintenance. A wall of buy orders hitting a vacuum of sell orders. The price has to jump to a level where someone is finally willing to sell. And in a market this broken, that level could be 120, 140, or higher. We are going to see a vertical green line on the chart that looks like a glitch, but it will be the most honest price discovery we have seen in 50 years. But there is a darker possibility, and we need to talk about it directly. If the CME truly cannot reconcile the books, if the Salt Typhoon hack has actually corrupted the ownership records to the point where they don't know who owns the gold sitting in the registered vaults, they have a nuclear option. They can declare force majeure, they can suspend all trading, and they can force every single contract holder to settle for cash. They can say, "We are sorry, we cannot give you the gold. Here's a check for the closing price on Friday." They could try to pay you cash for silver that is trading at a completely different price on the other side of the world. This is the ultimate rug pull. It effectively defaults the futures market without ever using the word default. They wipe out the short squeeze by changing the rules mid-game. If this happens Monday morning, if you log in and see trading halted or cash settlement only, do not celebrate the check you receive. That check is a confession. It is a confession that the paper market has failed. It means the contract you were holding was never a real claim on physical metal. It was a claim on a promise, and that promise just broke. And if they cash settle everyone, what do those people do with the cash? They panic. They take that cash and they run to the physical market to buy real bars. But the physical market is already empty. Dealers are offline. Delivery times are 8 to 16 weeks. Inventories have vanished. So the street price of physical metal will detach completely from the settled price of the broken exchange. We could see a world where the CME price is frozen at one number, but you cannot buy a real ounce of silver for anything close to that price. A bifurcated reality. Two economies existing side by side. One made of paper, one made of metal. But here is what you need to understand. In the world of modern finance, a cyber attack is the ultimate get-out-of-jail-free card for a bankrupt system. Think about it. If a bank runs out of money, they have to declare bankruptcy. It is messy. It is public. People go to jail. But if a bank gets hacked, if they suffer a critical infrastructure event attributed to a foreign adversary like Typhoon, suddenly they are not incompetent. They are victims. Suddenly freezing your withdrawals isn't a default. It is a safety measure. We are so sorry, valued customer. We have the money, we promise. We just can't let you access it right now because we have to scrub our servers for malware. It might take a week, or a month, or a year. This is what we are seeing today. The technical issues at the CME are not a glitch, they are a shield. The maintenance in Hong Kong is not an update, it is a lock. They are using the narrative of a cyber war to implement capital controls without passing a single law. They are freezing the exits because the theater is on fire and they don't have enough fire extinguishers. The $283 spread is the smoke billowing out from under the door. So if you are sitting there holding paper silver, if you are holding an ETF or an unallocated pool account or a futures contract, you are in the danger zone. You're holding a claim ticket for a coat check that has just burned down. When the force majeure hits, when the system finally admits that the metal isn't there, your claim ticket will be worthless. Or best case scenario, they pay you out in cash that is rapidly losing value. While the real metal trades at a premium you cannot touch. The lesson of this weekend is brutal but simple. If you can't hold it, you don't own it. If there's a counterparty between you and your wealth, that counterparty is now a point of failure. The hack has proven that the digital ledger can be erased. It can be manipulated. It can be turned off overnight. But you cannot hack a physical silver coin. You cannot erase a gold bar with a line of code. You cannot turn off the buy button on a piece of metal sitting in your own safe. This is why the spread exists. The market is pricing in counterparty risk. It is saying that 1 ounce of gold in your hand in Mumbai is worth $283 more than a promise of gold in a New York vault that might be empty. The market is telling you to get out of the system. It is screaming at you to convert your digital claims into physical reality before the cyber lockdown becomes permanent. We are entering a period of systemic partition. The West is going dark. The East is locking down. The liquidity is vanishing. And on Monday, the price is going to try to find the truth. The truth is that there isn't enough metal to cover the paper promises. The hack didn't create the shortage. It just revealed it. Do not get distracted by the headlines about Typhoon. Do not get lost in the technical jargon of reporting errors and system maintenance. Focus on the signal. The signal is that the vault is empty. The signal is that the exits are closing. The signal is that the only safe harbor is the one you build yourself. Mark from GoFinance. The data is dark. The spread is real. Subscribe if you want the signals before Monday hits.